Hello, good morning, good afternoon. Thank you for being here today. Very warm welcome to everyone. My name is Dan Smith. I am the Managing Director of Trident's US-based fund administration operation, which is based in Atlanta, Georgia. I came to Trident back in 2013 from a boutique administrator that Trident acquired. And I had been with that firm since 2004. So I've been in the fund administration business here in the United States going on 16 years now. We are currently a 70-person office with a very diverse client base here in Atlanta, ranging from small sub $5 million hedge funds, and then all the way up to managers managing in excess of $1 billion. So it's a very diverse client base here. Very similar to Trident globally, having a very diverse funds client base, which keeps things interesting. So very happy to join my colleagues in Cyprus and hosting today's webinar. Just a very high level of Trident. The firm was founded in 1978 and today is the largest independently privately owned provider of fund, corporate, and fiduciary administration services. We manage over 500 funds worldwide, in excess of $40 billion assets under administration. And as I mentioned, our clients range from small startup, next generation managers to very large established managers managing well in excess of $1 billion. The footprint of the firm on the fund side really started to expand in the 1980s, and in recent years has truly expanded in jurisdictions including Luxembourg, Malta, Singapore, and then here in the US. But Cyprus is actually a very recent joiner and player in the EU funds industry, and then you'll hear more about that today from our guests and panelists. So let me briefly introduce today's speakers. So Andreas Yasamedis is a president of the Cyprus Investment Funds Association and a partner at PwC Cyprus, heading the Fund Services Unit. My colleague Christine Economou is Director of Business Development at Trident in Cyprus. Robert Street is Managing Director of Byron Capital Partners. Thank you, Robert. And Konstantinos Papanastasiou is Senior Manager of Fund Services for EFG Bank, Luxembourg. Oh, excuse me. The Cyprus branch. And finally, Andres Mercuri is General Manager of Trident Trust, and he will moderate the Q&A session towards the end. So in terms of topics, the topics that the speakers will cover today include a broad overview of Cyprus as a new European hotspot for alternative investment funds, types and legal forms of funds in Cyprus, an actual case study of a manager redomiciling to Cyprus from the UK, third-party manco, and then finally depositary services and the delegation of that safekeeping function. So just a few points regarding housekeeping before we get started. There are handouts in the top right panel of your screen, which you can certainly access. There will be a live Q&A function at the end, as I mentioned, and you can put questions in the chat box, which is also to the right on your screen. And then finally, there will be an exit survey at the end, which we would please welcome your feedback and encourage you to please let us know your thoughts and feedback on the content is very important to us. So with that, let me pass over to Andreas Yasamedis, who's president of the Cyprus Funds Association, who will introduce everyone to Cyprus as a funds domicile. So thank you.
Good afternoon and good morning to everyone. It's always a great pleasure for me to present one of the most dynamic sectors of Cyprus economy, the Cyprus fund industry. Please allow me, before moving to the presentation on the Cyprus fund industry, to say some things about investor confidence, which is very important, especially for the fund industry. Obviously, in Cyprus, there are specific milestones in the last 10 years that have increased investor confidence in our country. I will not elaborate on many of these milestones, but I will mention that we have passed successfully the Moneyval's evaluation this year, and actually we scored very well. I mean, indicatively, I can say that we scored 92% comparing to 82% compliance, which is the score of Ireland, and 95%, which is the score of the UK. So for us, it was a great achievement, and obviously it's something that will boost investor confidence in our country. At the same time, it's very important to mention that we have, let's say, a very positive report by USA State Department. We have more or less adopted all the recommendations of the State Department, and this was a very positive sign for Cyprus economy as in general. Moving now to the main segment of my presentation, it should be mentioned that some years ago we have identified there was room for another player in the European fund industry, and since 2014 we have undertaken all the relative positive steps in order to establish Cyprus as a reputable EU fund hub. What we have done, first of all, we have transposed all the EU directives regarding the fund industry into local legislation, and as a consequence, a fund licensed and registered in Cyprus will enjoy the so-called European passporting regime. What does this mean? Any fund that will get a license in Cyprus will be able to market and distribute its unit within the EU without having to get any additional license from any other member state competent authority. This obviously will save time and money for any fund manager that wants to have access in the single European market. At the same time, we have revamped our legislation regarding alternative investment fund. We have now a modern, flexible, and very attractive legal framework for alternative investment fund, incorporating best practices for investor protection coming from other well-established fund jurisdictions. This new framework, combined with other benefits that we'll be analyzing in a while, have contributed into the significant growth of the Cyprus fund industry in the last 4 to 5 years. As you can see from the analysis here, and based on the reliable statistics of EPAMA, EPAMA stands for European Fund and Asset Management Association, Cyprus experienced in first quarter of 2020 the largest increase of total assets under management in the European alternative investment fund industry, with a remarkable growth of 196%, reaching a total of 8.3 billion euro total asset under management, which is a great sign of the benefits that Cyprus offering in to fund managers and to any founder of any fund structure. At the same time, and this is an important element, it's a great indication that Cyprus fund industry is gaining a momentum. Cyprus funds are now eligible for listing in all the major global platforms such as Clearstream, Vestima, Bloomberg, and Thomson Reuters. Obviously, this is very important because Cyprus funds are now visible and accessible to fund managers and investors across the world. If you can see from our diagram, we have all types of funds in Cyprus, including real estate, private equity, hedge fund. but the main focus is with private equity and real estate fund. We have investment in various sectors, including shipping, sustainable investment, energy sector, fintech, and we are very proud of the great growth that we have in our industry. As you can see from this slide, Fund in Cyprus explore all the market opportunities, including real estate opportunities in residential, student accommodation, commercial and industrial projects, in the shipping industry, ships and vessels with Cyprus flag, with all the tax benefit attached in Cyprus flag, investment in hospitality, education, healthcare, and obviously in the renewable energy. We have seen various fund managers establishing a structure in Cyprus in order to capture opportunities in the region, including Middle East, Asia, and Africa. It's very important to understand what are the main benefits of having a fund in Cyprus. First of all, as we all know, it's very crucial for any fund manager who wants to establish a new fund to consider the cost element. Given the fact that now with COVID-19 pandemic, returns are not so predictable, the only thing that any fund manager can predict and control is the cost element. Cyprus offers a cost-efficient solution not only for the setup, but for maintaining a fund. And this is not because we sacrifice the level of quality in the services offered. On the contrary, Cyprus has been a center of excellence for financial services for so many years, but because in general, labor costs, rental prices, and other costs in Cyprus are much lower than in other European jurisdictions, such as Luxembourg and Ireland. At the same time, we have, in addition to the general attractive tax system that we have in Cyprus, specific tax incentives have been given by our government to fund management companies to establish their structure in Cyprus in an effort to further boost the fund industry. Indicatively, I would say that any fund management fee in Cyprus would be taxed at 8% and not at 12.5%, which is the normal standard corporate tax rate. In addition to this, fund management and fund administration fees does not have any VAT, which is a saving of 19% to any fund manager that decide to establish a structure in Cyprus. Regulation. Cyprus legal system is based on the common law, which is widely considered as one of the most business-friendly legislation in the world. In addition, regarding the fund industry, as I mentioned before, we have now a very flexible and attractive legal framework incorporating all international and European latest trends and development in the fund industry. Furthermore, as was indicated also in the video, the strategic location of Cyprus provides access to high growth regions such as Asia, Africa, Middle East, and Israel. At the same time, Cyprus being full member of the European Union and has transposed all the EU directives into local legislation, provides a gateway to all Asian, Israeli, and any other fund manager, including US fund manager that want to have access in the single European market. This is from me. I will now pass on to Christina to elaborate and analyze the main types and legal structures of funds in Cyprus. Christina?
Sorry, just realized I'm in mute. So thank you, Andreas. Ladies and gentlemen, good evening and good afternoon to those joining from a different time zone. A very warm welcome from me as well, and it is a privilege to present before you. Thank you also to my fellow speakers and very good associates of Trident for accepting this invitation to speak to our digital event. Your expertise is, of course, of great value to this webinar. Now, in this particular session, I will elaborate on the types of alternative investment funds available in Cyprus. There will be a lot of information on the screen where I will try to cover most. The table that you see on your screen and the one to follow is available in the control panel under the handout box on your right-hand side. Currently in Cyprus, we have 3 types of funds available. The first 2 being the Alternative Investment Fund, which is the common European legislation structure, and the Alternative Investment Fund limited by number of persons, which is based on a local legislation and is not a passported structure. The Alternative Investment Fund requires full fund license, even if a fund manager is doing the management with their own license. Still, the fund must be licensed with a local regulator, the CISEC. The Alternative Investment Fund limited by number of persons also requires licensing, although it is not a passported structure. The AIF and the AIF LNP, as we call it here, the limited number of persons, if they are set up as companies, can also act as a self-managed structures. That means they will require a second license, so the 2 structures will require a license for the fund and also for the members of the fund. The AIF is the only structure that can be also available to the retail investors, while the AIF LNP is available to professional and well-informed investors. In regards to the legal forms, both types can be set up as companies, either variable capital or fixed capital investment companies, or limited partnerships. In the case of the AIF, it can also be set up in the form of a common fund. The minimum capital requirements for a self-managed AIF is euro 125,000, which increases subject to the assets under management. In case of the AIF limited number of persons, the minimum capital requirement is limited to euro 50,000. There is a minimum launch threshold whereby for the AIF the amount is €500,000 and the AIF limited number of persons the minimum launch threshold is €250,000. Both requirements must be fulfilled within 12 months since the licensing has been granted. The AIF can hold unlimited amount of assets under management, while the AIF LNP can only operate below the thresholds set by the EU directive, which is up to 100 million including leverage and 500 million with no use of leverage and with no redemption rights for 5 years. Both options allow the umbrella fund version, whereas various compartments can be set up with different policies, different strategies, even with different portfolio managers. The AIF can accommodate unlimited number of investors, while the AIF LNP is restricted to 50 ultimate beneficial owners. So public companies or pension funds cannot invest in the AIF limited number of persons. Lastly, both the AIF and the AIF LNP must have a depository. For the case of the AIF, the depository needs to be local, either a bank or another financial institution. For the case of the AIF LNP, if certain conditions are met, the fund is exempted from the obligation to appoint a depository. If it still requires the appointment of a depository, there is no restriction as to the domicile of it. Of course, Konstantinos Papanastasiou of EFG Bank will shortly elaborate on the duties and services of the depository. Now, moving to the next slide, and to the third type of fund, the registered alternative investment fund, which was introduced in July 2018, and is the fund that has boosted the demand for Cyprus funds as it is a very competitive and potentially passported structure, as well as fast to set up and release. The RAIF does not require license from the local regulator, but operates under the license of its external fund manager. The regulator will review the documentation, and the legislation states that the regulator needs to release the structure within 30 days of receiving the documentation. RAIF can only be available to professional and wealth-informed investors and can be set up either as a company, either fixed or variable, as a limited partnership or a common fund. There are no minimum capital requirements, and the number of unit holders is unlimited. In regards to the minimum launch threshold, the amount is the same as with the AIF, and it is at €500,000. There are no restrictions in regards to the amount of assets under management, and while the AIF can be set up as umbrella fund. There is a requirement to appoint a local depository. Now, moving to my last slide of today's presentation, which came up following a discussion with a couple of my colleagues, members of the international funds team in Trident Group. And while presenting the Cyprus offering, I was asked to share with them the trend we experience in Cyprus in regards to the type of clients we get and the type of funds they choose to set up. So looking into our portfolio with Trident Cyprus and talking with my fellow speakers and colleagues in the industry, the interest for the AIF type of funds mainly derives from the fully licensed alternative investment management companies, including fund hosting platforms that my fellow speaker Robert Street of Byron Capital will talk about. Other clients for the AIF setup are also pension funds and asset managers who sit outside of EU. Now, as we all know, family offices have become increasingly sophisticated, having corporate structures underneath, managing different investment strategies. We see a number of family offices interested to set up the alternative investment fund for a limited number of persons, which is a fund mainly geared towards family and friends. This type of funds cater for a club deal arrangement and provide the bankability due to being a regulated financial vehicle, and it's easier to open bank accounts. Moreover, startup fund managers, small to medium-sized fund managers, and asset managers outside of EU consist of the pool of clients looking to set up this particular type of fund. In regards to the RAIF, the interest is mainly derived from family offices who do not have the expertise yet to operate an EU compliant structure, while they are looking for economies of scale and cost optimization. Also, we have seen interest from asset managers outside of EU, for example, asset managers based in Switzerland or Israel. As Andreas, the president of the Cyprus Investment Funds Association, has mentioned, we have seen a tremendous growth in real estate and private equity vehicles, emanating mainly from the favorable tax regime that exists in Cyprus. Therefore, in all three types of funds, the private equity vehicle structure prevails, while for real estate funds, we mainly see them structured under the AIF and the RAIF type of funds. Startup IT companies have been very popular in Cyprus, especially lately, given the very favorable IP box regime that has been introduced in Cyprus, and also the incentives that the Cyprus government is giving to companies that they would like to relocate to Cyprus and establish their headquarters here. So startup IT companies who are looking to set up a regulated small fund are interested for the alternative investment fund limited number of persons. At this point, I would like to thank you very much for your time. Very much welcome any questions, and I will now hand over to Robert Street, Managing Director of Byron Capital. Thank you.
Thank you very much, Christina. Thanks everyone at Trident for putting on this webinar, and very happy to be here today. I thought it'd be good to just start to sort of actually go through how we came to be here, and how I personally came actually to be in Cyprus. So in terms of how we actually, our business actually originated in the UK. And I actually personally relocated to Cyprus in 2009. At that point in time, we had a London-based asset management company, and we decided to set up a Cyprus subsidiary company. So I was given the mandate of relocating down from London at that time down to Cyprus to set up a full-blown subsidiary of what was then our FCA authorized parent. So 10 years later, or over 10 years later, I'm still here. I originally, in all sincerity, came down here on a 2-year contract, but things have gone sort of wonderfully well in Cyprus, and 10 years on, I'm still here. So originally, we obtained our authorization from CySEC as a Cyprus investment firm, which is commonly known as a CIF. Just as a by the by, we're sort of a fully independent, privately held asset management company. Our shareholder base is primarily English and German in nature. After 2015, we saw that, just call it the direction of travel within the European fund management space, and particularly in 2013, we had the advent of AIFMD. So we took a strategic decision to convert our license and become an AIFM. To sort of great surprise of many, BCP Cyprus actually outlived BCP London. The ownership of the business took a strategic view that post-Brexit in 2016, all of our operations and substance would be moved to Cyprus. The reason being, we wanted to position for what we view as the new normal. That's to say, you require an EU27 fund management company to manage an EU27 domiciled fund. And in April 2018, we took that one step further and actually bolted on the UCITS management company license to our existing AIFM license. So we're now what's technically called a super manco. That's to say, an alternative investment fund manager with a UCITS management company license. And we actually got that UCITS management company license to externally manage a UCITS fund outside of Cyprus that we'd already been managing for 8 years as a self-managed investment company. Currently, we manage a number of alternative investment funds and registered alternative investment funds. Registered alternative investment funds being the new product, as Christina alluded to, in Cyprus, that was rolled out in 2018. And in line with that new product and in line with that product evolution in Cyprus, we've seen a rapid growth in our external management company services. And we act as the external manco to a number of IFs and RIFs in Cyprus. And we're seeing that continue, even given COVID in 2020, with a good order book coming through for 2021 of new IFs and RIFs, which is very encouraging for us, but also for Cyprus as well. With respect to your choice of fund structure and the management model, essentially these days in the EU, you have 3 choices. You have the self-managed route, the proprietary manco route, which is effectively set up your own AIFM, or you can use something that we offer and others as well, which is essentially the third-party management company services. Now, the self-managed, we used to have self-managed funds ourselves. I mean, this was very popular. Actually, as recently even as 2018, it was generally viewed as a cost-effective solution, with essentially the board of directors responsible for all the functions of the fund. And in reality, the truth is that obviously the board of directors would delegate down most of the functions to external service providers, fund administrators, depositories, investment management, but ultimately the board was responsible for the day-to-day management of the fund. That, given substance changes, both from a sort of a tax perspective, but also from a regulatory perspective, has now questioned the viability of that kind of fund structure. And also there's been a lot more push from the regulators, not just in Cyprus, but also outside of Cyprus, looking at time commitments of directors to ensure that a suitable amount of substance is demonstrated from these funds. In terms of the AIFM proprietary ManCo option, that is obviously a very effective way of ensuring that substance is clearly demonstrated to the regulator, and unequivocally in that case the management and the control of the fund resides with the AIFM. In terms of the negatives, obviously that does take a while to set up. There are minimum capital requirements, and then you have that ongoing cost base as a consideration. Now, certainly for larger groups that does make sense, and typically we see AIFMs being set up for groups with significant assets under management. In terms of the third-party ManCo option, which is where we kind of moved the business towards in 2018 with the advent of the Cyprus RIFE, that is also a very effective way of demonstrating substance, with also the capital requirements being met by the use of the third-party management company, i.e. there's no requirement for the sponsors of the fund, so to say, to put down capital. So this is a very effective turnkey solution to use the third-party ManCo option, and also from an institutional quality perspective, given the oversight and the operation and the day-to-day management of the fund, in terms of the oversight at least resides with the AIFM. From an institutional investor perspective, it ensures a very, very high level of oversight. In terms of the negatives, obviously there is some degree of control that's lost to the third-party ManCo, but ultimately the sponsor of the fund, which could also be an independent investment manager simply wanting to use the third-party ManCo platform. Typically the fund board would be controlled by the investment manager, which does obviously give them some say in terms of control of the structure. Moving on to legal and regulatory considerations, given what's happening in the EU at the moment, specifically Brexit. I mean, Brexit was a inflection point, obviously, certainly in my opinion, for the European fund management industry. Typically, the FCA had a huge amount of influence in terms of the way that the European fund management industry was managed. Now, I think what will come through is you'll have more of a Franco-German agenda come through, with ESMA having much, much more say in terms of what's going on, and the UK generally on its way out in terms of any kind of influence in decision making. That's obviously a product of the UK simply not being a member of the European club anymore, so to say. We mentioned this in the last slide, but we're definitely seeing a transition away from these self-managed funds or self-managed investment companies, as they're often called. Now, back in the day, this was particularly fashionable, this kind of structure, certainly with US and UK investment managers who wanted to set up a fund in obviously a friendly fund domicile jurisdiction. That could be Ireland, Luxembourg, Cyprus, Malta. However, now what we're generally seeing is a transition from the fund domicile to a fund management hub. And that's quite an important point, because it's no longer, I think, feasible going forward just to simply have your fund domiciled in one country, but potentially have the substance of the operation taking place in another. Certainly because of regulatory and tax changes, what we're seeing now is that we're having a fund domicile and a fund management taking place in one hub. I mean, that's something that's relatively new, I think, within the past couple of years, and that's certainly here to stay. ESMA, obviously the mouthpiece of European fund policy, has now come out with guidance or regulatory mandates actually regarding the minimum number of employees that you have to have at an AIFM. Officially, that's 3 full-time employees, but from what we see and from what others see, really in reality, the number is a multiple of that number in truth. An AIFM requires a CEO, and there's a lot of regulatory focus on the robustness of the organizational structure of the fund manager and the function organizational effectiveness, which is something that's obviously monitored quite closely and subject to regulatory scrutiny. As I said, we're having this dual pressure from regulatory and taxation for the fund management and the fund and the SPV to be with jurisdiction. That's the bar of the BEPS project. By OECD, and certainly pushing for fund management activities to be conducted in the same location where profit is derived, with the goal of this purpose being essentially the combating of tax avoidance. On the AML side, and generally on the compliance side, which is a huge subject these days, particularly in Europe, the FATF global focus on AML requires an increased local oversight of AML and KYC functions in the jurisdiction of the fund. So again, that is pushing this central hubbing, I would call it, of funds and fund managements within one EU domicile. Andreas alluded to the cost argument, which I think is becoming a real increased focus for regulators actually across the EU 27 and also in the UK. Certainly the FCA, ironically, has taken the lead here, given Brexit, by looking at this concept of the value assessment for funds, in that they're actually pushing for funds to actually produce on an annual basis an assessment of how that fund is delivering value for investors. Now, part of that value obviously is derived from cost, with the focus on total expense ratios in particular, to make sure that investors are getting bang for their buck, so to say, from funds. ESMA also put out some data last year showing that UCITS funds are actually reduced by approximately 25% through fees. And the other issue, I think, for most fund managers, including us, is you have this zero interest rate policy. Now, that has been a hot topic over the past 10 years, given the financially repressive environment that we've lived in terms of monetary policy. But the reality is that this, now even more so post-COVID, is here to stay. In that, again, one interesting note that came out from the IMF recently, post-COVID and post the reductions in interest rates globally as a response to that, is that you have 60% of the global economy and 97% of advanced economies with interest rates below 1%. And in a fifth of the world, they're actually negative. With respect to funds, what does that mean? It means that traditionally that income statement in terms of your returns are certainly under pressure. Even risk assets these days are arguably overpriced, which means that if you're running a fund, you've also got to focus on the expense side of the income statement and ensure that the fund's expense base is appropriate to ensure that, again, investors get their value for money and that total expense ratios of funds are manageable going forward. This is obviously gained in precedence, actually, in terms of we're having a huge increase and movement towards defined contribution schemes, where effectively people are put in charge of their own financial destiny with respect to pension planning. So obviously the regulators are ensuring that the retail investors, but also well-informed investors, professional investors, are getting value for money from their funds. Another hot topic is delegation. The AIFM or the ManCo can delegate the investment management function or risk management function to a third party. It certainly can't do both because that would be sort of red light from a regulatory perspective, essentially because then the management company would become a letterbox entity. So typically what we see and what we do with some of our mandates is that we can delegate that investment function to a third party. That third party can be in the EU or the EEA, but also can be to a third country. And the prerequisite for that is that the delegate is authorized or registered for the purpose of asset management in that third country and is subject to prudential supervision and cooperation between the supervisory authorities here at SciSec and also in the third country. With my last slide, I wanted to give you an overview of Cyprus. As I said, I've been here for 10 years. It's a country that I know and love now, very, very much settled here. And for me, it's just great to see Cyprus getting a huge amount of traction as a fund management center and also as a fund center. We have that common law link due to historical links with the UK that I think makes Cyprus certainly an ideal hub for the post-Brexit business. And obviously the common law system is something we're very familiar with from the UK and as Andreas alluded to, is a very, very user-friendly legal setup. Cyprus is an EU 27 jurisdiction. So again, also as Andreas alluded to at the start of this webinar, you have that passporting access that comes with being within the EU 27 jurisdiction, which now obviously UK management companies won't get. That will fall away due to the UK best case becoming a third country. So particularly with AIFMD, the passport comes with the fund manager, not the fund product itself. It's important to remember that. The cost we've discussed. That's certainly a huge benefit of Cyprus, particularly for incubating sort of younger funds with lower AUMs to give them time to get going with a respectable total expense ratios. The other thing I like about Cyprus as a fund manager is it's very much open architecture, where you can work with independent fund administrators and independent depositories. In the larger fund jurisdictions, you are essentially handcuffed to a certain extent to working with the same group, i.e. that's to say the fund administrator and the depository typically come within the same group, simply because AIFMD has forced economies of scale in those jurisdictions, which means those service providers typically only want to do the fund administration and depository, and if they don't do both functions, then probably you won't get a foot in the door. From a tax perspective, Cyprus traditionally has been extremely competitive and has a number of double taxation treaties with particularly a very, very strong network in Eastern Europe. And the Cyprus funds, typically we have a lot of private equity and real estate funds that are extremely favorable from a tax perspective. And from my personal perspective, as I said, this is an excellent place to work and live. The climate is very, very favorable. So certainly coming from the UK, that was a welcome change to start with. It's English speaking, there's an English cultural overlay. My Greek is not bad these days, but you can interact with the regulator in English, you can interact with all fund service providers in English. It's a very, very strong English knowledge base, which makes life extremely easy, I think, for someone wishing to relocate to Cyprus. The school's are excellent for young families, same for me in this case. And also it's affordable. It's a place where you can have a very, very nice standard of living with high affordability rates. And also, as Andreas alluded to at the start of the webinar, there's some very, very attractive redomicile packages for persons wishing to relocate to Cyprus, particularly in the fund management industry. And it is a strategic priority for Cyprus to become an increasingly established fund management centre. So thank you very much for your attention and the opportunity to speak. And I will pass over to my colleague, my associate, Konstantinos Papanastasiou.
Good afternoon to the European participants and good morning to the US participants. I'm Konstantinos Papanastasiou. I'm from EFG Group, and I will speak about the depository duties and specifically about the delegating functions in accordance with AIFMD. I will start with a few words about EFG and our presence in Cyprus. EFG is a global private banking group offering private banking and asset management services. It's headquartered in Switzerland and is listed on the SIX Swiss exchange. It has a presence in major financial centers around the globe, in 40 locations worldwide, with a network spanning from Europe, Asia Pacific, the Americas, and the Middle East. Its assets under management, based on the 30th of June financial figures, amounts to 147 billion Swiss francs. The largest shareholder is EFG Bank, the European Financial Group, and it's an A rated according to Fitch and A3 according to Moody's. Now, about EFG presence in Cyprus. EFG presence in Cyprus was established in 2015, acting as gateway with access to all jurisdictions in which EFG has a presence. EFG Cyprus business is a branch of EFG Bank Luxembourg, which is in turn 100% subsidiary of EFG Bank in Switzerland. And since July 2017, EFG Cyprus branch offers depository and custody services to local alternative investment funds in compliance with the AIFMD directive. Our depository services are offered directly from our branch in Cyprus, with certain services being delegated to EFG Bank in Luxembourg. So when we're going to show later on our operational model in the next slide. And currently, EFG is the only international investment grade rated bank offering depository services in Cyprus. As my fellow speakers mentioned earlier, especially Christina, an AIFMD compliant fund, such as the AIFs and the RAIFs, they must have a local depository. And the local depository can be a local bank or a local branch of an international bank. And EFG satisfies this criterion. So based on our operational model, certain functions are performed by EFG Bank, the Cyprus branch, and certain functions are delegated to Luxembourg based on a global level agreement. The cash accounts, openings and maintenance are in Luxembourg, and where our global custodian is EFG Bank in Switzerland. Now, in the next slides, I'm going to speak about the delegation of safekeeping functions in accordance with the Alternative Investment Fund Managers Directives. And this is particularly important in cases, and I have seen this in practice, where initiators of private label funds, such as ultra high net worth individuals, wish to allocate their portfolios not only to one bank, who is the depository, but among various banks that are usually include prime rated banks. In such a structure, and I have witnessed it in various occasions, EFG Bank, the Cyprus branch, is the depository and delegates the safekeeping functions to delegates to these prime banks. And I have agreements with other prime rated banks, and we're going to speak about these agreements. And these banks are act as the delegates for the section of the portfolio allocated to them. And in the next slides, I will illustrate the modus operandi of such an arrangement, including the mode of communication and mutual obligations among all parties involved. As I said, the delegation of safekeeping functions are based on the Alternative Investment Fund Managers Directive, and specifically Article 2111 to 2113. And this allows the delegation of the safekeeping functions under several conditions. For each delegation, it can be delegation to a prime broker or to a bank, a separate delegation agreement shall be signed, and such an agreement sets out the organization of the relationship between the fund, it can be an AIF, it can be an AIF, the AIFM, the depository, and the prime broker sub-custodian. As I said, the delegate can be either a prime broker, a bank, or any other party licensed for custody tasks subject to effective and prudential regulation, including minimum capital requirements and supervision. The parties involved is the AIFM, the depository, the fund, and the delegate. The agreement sets the roles and responsibilities of all the parties involved, and the responsibilities are stipulated by the AIFMD provisions, Article 2111, and include, among others, that the delegate segregates the assets of the fund from its own assets and the assets of the depository, and that it does not make use of the assets without the prior written consent of the AIF and other conditions in relation to the appointment by the delegate or any other custodians. The agreement provides the depository with a right of intervention in relation to the sub-fund's assets, which has been entrusted to the delegate if the depository deems to be no longer able to fulfill its supervisory task. This is exercised usually through a general power of attorney granted by the board of directors of the fund to the depository. It also includes specific reporting requirements for the delegate towards the depository. For example, just to mention, the reporting can be available to the depository at no later than the end of the next business day. This is just to give you an example. Liability and indemnity. This is one of the most major clauses of the agreements, of the delegation agreements, and this is where parties might disagree on this clause. As per the requirements of the IFFD, the depository can transfer the liability, and specifically under Article 2113, for loss of custody of the financial instruments to the delegate. And the delegate shall assume and acknowledge its liability to the fund or the depository acting on behalf of the fund. So there is a transfer of liability specifically for the loss of the financial instruments held under custody. The duration of such a delegation agreement can be for an unlimited period, but there can be provisions where either party can terminate the agreement on a monthly with a 1 month prior written notice. The applicable law, usually as the fund, the AIFM and the depository are Cyprus registered, the delegation agreements are governed by the Cyprus law. However, as many international banks are unwilling to sign an agreement with Cyprus law or unfamiliar with, other laws can be considered. Lastly, I will finish with some consideration based on my experience that the initiator have in choosing their depository. First is the financial strength and the sound balance sheet of the depository. Having a depository with a high credit rating and sound balance sheet provides confidence to the investors that the depository can fulfill its obligations arising from the strict liability requirements. And so this is extremely beneficial in the capital raising process of the fund. Another consideration is the knowledge of the particular asset. Having a depository that has a thorough understanding of the particular asset could save the initiator's time and cost, as if you have experience, not only me, but my Luxembourg colleagues have experience in various types of assets, such as real estate, private equity, transferable securities, and even more rare type of assets, such as art and other types. Then provision of flexible solutions. Provision of flexible solutions and quick responses is something important, and this is usually true in more tailor-made offering organizations such as private banks. And lastly, the existing broker or delegate network that I described earlier, that this flexibility is quite important is a quite important consideration in choosing your depository. That's all from me. Thank you all. And now I will pass to Andreas Mercuris for the Q&A session. Thank you.
Good afternoon or evening, everybody. I too want to take this opportunity to welcome everybody to today's presentation. I also want to thank my fellow panelists for their, what we hope has been a very interesting and informative presentation of Cyprus being the new kid on the block in terms of fund domicile. I also want to thank you for your questions. I mean, there's been a number of questions that have been coming through. Please feel free to continue sending those through, and we'll try and cover as much as possible within the time frame that we have for the questions. I've tried to group the questions based on each of the panelists, background and experience, just to help with the flow of the Q&A, and hopefully getting those right responses that everybody wants for their questions. So Andreas, if I can start with you, question we have here is just basically how easy is it to set up a fund in Cyprus, not covering just fees and the ease of the time frame to set up, but also how easy it is to find the various team of service providers to help a client understand his strategy and obviously take it through to launch of the fund.
Thank you, Andrea. Obviously, there are valid concerns for any fund manager or advisor that wants to establish a fund in a new jurisdiction. Obviously, we don't have any complicated procedure regarding setting a fund in Cyprus. Actually, I can say that it's a quite simple application process, and there are various reputable promoters in Cyprus that can help with this application process. Indicatively, I can say that there are so many providers of licensing services that we, as PwC, decided to have a dedicated team for these services, and at the same time, we have seen all the major players in Cyprus offering these specialized services. In addition to this, and it's important this to be mentioned, SAISEC, our regulator, is quite open for discussion for any issues of concern regarding the application process or the operation of the funds later on, which is very, very important, and it's well received by fund managers that they have established a structure in Cyprus. Regarding the costs I mentioned before, I mean, comparing to other reputable EU fund jurisdiction, Cyprus offers a cost-efficient solution. If I can say some numbers indicatively, the cost of having a fund in Cyprus, both setup and maintenance cost, is more or less 1/3 of what is a cost in Luxembourg or in Ireland. Regarding timing, obviously, there are different options. If you go to a full-fledged fund, this one may take from 3 to 6 months, depending how completed the application, how complicated the structure. But we have introduced another structure, as Christina mentioned in her presentation, the RAIF, the Registered Alternative Investment Fund, where you don't need to get any authorization from the regulator. So this process can take between 1.5 to 2 months, and the fund will be up and running in this period, which is considered to be a very short period to have a fund up and running.
Okay, and what would you say would be currently sort of the average size of a Cyprus AIF?
Okay, when we identified that there was room for another player in this industry, we decided that we'll focus more on small to medium, let's say, fund and fund managers, where cost is a crucial element for them. because Cyprus, as mentioned many times from my colleague, offers a cost-efficient solution. So we have funds starting from 50 million going to 500 million euros. Obviously, it makes sense also for big funds to come in Cyprus, but I believe especially the cost element is more crucial for small to medium funds that they want to keep cost as low as possible in order to maximize the return for their investors.
Okay, the next question, I mean, okay, in your presentation, you covered, of course, a lot of the benefits that Cyprus has to offer. But if you were to sort of focus on the unique selling point for Cyprus, and perhaps maybe just covering what that unique selling point will be for your typical US, fund manager, since we have participants from the US.
As in general, I could say that there are three things that are the selling point of Cyprus. Obviously, cost, which is very important for any fund manager. Attractive tax system with specific incentives for fund managers to establish or to relocate their structure in Cyprus. And last but not least, obviously, the access in the high growth areas such as Asia, Middle East, Israel, whereas at the same time we are member of the EU, so they can combine the European element with access to this region. Regarding the US fund manager, Christina mentioned 3 types of funds, and it's important to know that if an alternative investment fund for a limited number of persons is to be established in Cyprus, this fund can be managed by a US fund manager. There is no need to establish a structure in Cyprus, provided that you have a portfolio management license in the US. So, in addition to the general, let's say, selling points and benefits that Cyprus offer, accessing the EU single market, access to high growth area, cost, tax, US fund manager may take opportunity of this element from our legislation and establish a fund in Cyprus without, let's say, having to establish a fund management company. Obviously, this fund cannot be passported within the EU, but maybe if you have your investors and you don't care about marketing and promoting the fund in the EU, this may be a very good option for any US fund manager and want to have a structure inside.
Thank you, Andreas. I mean, we've just had a question come in, which is, I suppose, leads on to what you've covered, so I'll address it to you. Are there any self-managed funds in Cyprus, and what form do these funds usually take?
Self-managed fund?
Yes.
Okay. Obviously, in the past, we have many self-managed funds. We have a different legislation. We have revamped this legislation in 2014. And I think, a majority of the funds established in the last 2-3 years are externally managed in order to capture the relevant expertise of the fund manager. Obviously, internally managed fund is an option. We have this option. We want to have all the options available for any fund manager or advisor to establish a fund in Cyprus. However, if you want to capture the expertise of the fund manager, the track record of the fund manager, and maybe to have a more cost-efficient solution, internally managed fund is not the proper, let's say, structure. Still, we have this option, and obviously we can structure a fund having this form.
Okay, thank you, Andreas. Robert, if you can move on to you.
Sure.
You shared your story of obviously your journey is from moving from the UK to Cyprus, and of course I think a hot topic at the moment is of course Brexit.
Sure.
And of course I think we're all following the developments there and possibly leading to a no-deal Brexit. But how do you see the developments of Brexit or Brexit in general for opportunities for Cyprus, and what impact it will have for Cyprus in terms of growth of the fund industry, and in what way could that be seen for Cyprus?
Yeah, it's a good question. I mean, I think it's very difficult to sort of gauge how prepared UK fund managers are. I mean, I think the data shows that still you have 1.8 trillion of European fund management assets managed out of London. But I think obviously the FCA has sent out numerous pieces telling fund managers to prepare. But I think from what we've seen and talking to colleagues and associates still based in the UK, I would say a lot of the boutique managers maybe still don't seem to really have a Brexit plan in place, particularly for those looking to distribute within the EU. I mean, as Andreas alluded to, I mean, a key question is actually whether you're looking to distribute within the EU 27, because ultimately the UK is going to become a third country, and the passporting comes with the fund manager license, not the product. So unless you have something in the EU 27 going forward, you're essentially handicapped from a distribution perspective. But I think a lot of, certainly the folks that we speak to, a lot of fund managers on the boutique side, I think a lot of the larger players have obviously made their Brexit plans and maybe have something in place potentially in Northern Europe. But I think that the message that I'm getting is a lot of other fund jurisdictions are really very much at capacity. Costs are therefore going up. There's potentially also some staff shortages I've heard as well. A lot of delays also in terms of just because of the sheer number of applications that have gone into other EU 27 member states to get an AIFM license. So I think that first comment is a lot of folks I don't think are prepared in the UK on the fund management side. And I think that there'll be a rush potentially in 2021 to try and get something credible within the EU 27. And I think Cyprus, which is obviously not as well known in the UK, maybe as other fund jurisdictions, definitely has the ability to try and, I would say, attract the more boutique fund manager, where cost certainly is a consideration. And I think that having something in an English-speaking country like Cyprus in a common law jurisdiction, that is potentially very, very attractive.
Thank you, Robert.
Sure.
There's a couple of questions here on depositories. So Konstantinos, firstly, why are depositories necessary in Cyprus?
These are not necessary just in Cyprus. They are necessary across the European Union, and this is because this is in order to safeguard the investors' interest. This is an extra layer of protection for investors' interest. And the IFMD stipulates a lot of provisions on depository, and the depository have strict liability towards the fund and its investors. So the functions of the depository, they come from the Alternative Investment Fund Managers Directive, and the liability towards the fund and its investors as well.
And just to clarify, a certain point you mentioned, can you sort of explain further the concept of delegation to third-party custodians?
Yes. The delegation when you have a fund and the initiator of this fund wants to keep the allocation to various banks, so to transact, for example, to do the execution of its fund and to have a diversification, he might want to diversify his portfolio across many banks. And this can be done. There are provisions in the IFMD on how this can be done. And this is usually with a delegation agreement between the depository that keeps the ultimate liability towards the investor and the fund, and the delegate that assumes the liability only for the loss of the financial assets for that portion of the portfolio that is delegated to them. And this is extremely important for initiators that have that are multi-bank, let's say.
And for investors considering a depository, what would you say would be the key qualities that they should look for?
These are first of all, is the financial strength of the depository, because of the strict liability of the depository that has. Then is the flexibility and the experience of the depository. Let's say I don't have the experience to a specific type of asset. Then the depository will raise unnecessary questions, and this will you have a time burden and a cost burden, both in onboarding and on maintaining the fund. Also, the network that I mentioned earlier, the network of the existing delegates is something important, because then you don't have to go again from scratch to draft and agree a delegation agreement, because you can replicate the existing agreements that you already have with these banks.
Okay, Konstantinos, thank you. And obviously conscious of the time as well, but just to wrap up the line of questioning, final question for you, Christina. You mentioned the, obviously the types of funds in Cyprus and the various stages of the development of the industry. But what would you say would be the key trends currently within the industry that we're seeing?
Yes, thank you. So I think it was mentioned before that the major trends that we are seeing in Cyprus is the move towards the registered alternative investment funds. I guess it's because of its efficiency and the speed of setup and release the fund, which takes approximately 2 or 3 months as a time frame. Also, I should say that we have seen a lot of interest from investors, mainly due to the availability of excess cash in the system, or even the negative interest rates. So investors are looking for fund managers who are investing and having a strategy capable to cater the new norm that we are all going through, especially this year.
Thank you, Christina. One final question that's just come through. Back to you, Konstantinos. In terms of what is actually deposited with a fund custodian, shares, investment units, etc.
The depository is responsible for both financial assets. These are assets that can be held under custody, and non-financial assets. These are considered as other assets. For the financial assets, these are assets held under custody, whereas the depository duty for non-financial assets is the ownership verification, due diligence, and record keeping of these assets to ensure that these assets belong to the fund and they cannot be transferred out of the fund without the previous knowledge of the depository.
Thank you, Konstantinos. I think that ends the line of the Q&A session. And obviously, just to close off, I mean, of course, I want to, thank you all for your participation today. We do hope it has been, informative and interesting for you. Just a couple of points. I mean, okay, we did have a line of questions that came through. If you do have any additional questions, please feel free to send these through to us. And of course, we can get those answered to you, or send any additional information or queries you have in terms of Cyprus and the domicile here. As it was mentioned in the beginning, you will be getting a short survey. Please do provide your feedback. It obviously helps us, improve or get better in terms of any future webinars that we offer. Thank you all. Wishing you all a pleasant afternoon or evening. And that brings us to the end of today's webinar.